I'm Roxana Naidu. I'm an admitted attorney here at Tax Consulting South Africa, specializing in expatriate tax. Today I have here with me Lovemore Ndlovu, Head of SARB Engagement and Expatriate Compliance at Tax Consulting South Africa. And the topic we're going to be discussing today, Lovemore, is navigating exchange control and banking for financial immigration. So we have the right person here with us today. I think just to jump straight into it, there's going to be a few initial questions that I'm going to pose to you that just helps us understand what exactly financial immigration is in order for us to then jump into the navigating exchange control. So firstly, Lovemore, thank you so much for joining us.
Thank you, Roxana.
Can you explain what financial immigration entails for South Africans relocating abroad permanently?
Thank you, everyone. The most important thing about financial immigration is ensuring that every foreign earned income and assets are safe from the South African tax net. That's the most important thing. The other thing would be then, if you are willing or wanting to transfer funds, then you will also be able to move those funds abroad and reinvest wherever you want to outside South Africa. But the core thing, it's basically making sure that you become non-resident and your foreign earned income and assets are safe from South African taxes.
Thank you. So I've got a page here with a lot of questions on here, and I just want to make sure I don't miss any of them. So that's why I've got them written down. A lot of these questions have come from clients of ours, have come from expatriates living abroad. So I've compiled quite an extensive list, and we're going to then pick Lovemore's brain today on quite a few of those questions. So just to get back into the navigating financial immigration, what is the significance of obtaining a SARS notice of non-resident tax status letter in the process of financial immigration?
That's the hard proof that you need to confirm that you have gone through the formalities of becoming a non-resident from a tax perspective in South Africa, and with that you are in a position to fight anything that comes your way from SARS where they want to try and touch your foreign earned income and assets. So it's the vital document. We always refer to it as a golden letter, because that's the letter that really says you are safe from being taxed on your foreign earned assets and income.
Correct. I've often heard it called the golden letter. I think there's a lot we can also touch on that non-resident letter following significant regulatory changes within the tax sphere, within SARS as well. And I think that's going to be a whole another session that we're going to we'll speak on that actual letter. So look out for further chats with regards to the full letter as well. Okay, so Lovemore, how does transitioning to non-tax resident impact an individual's obligations in South Africa?
So the main changes is around submitting returns. So there is a difference between the two categories of people, the resident and the non-resident. Well, the main difference between the two is basically, as a non-resident, you don't have to declare your foreign earned income. You only declare whatever you earn in South Africa. If nothing, then that would be zero. Whereas a tax resident will have to declare everything they earn worldwide. So that's the main change in terms of going through this process. However, the rest of the things still apply depending on what we're looking at in terms of taxing. Anything that is left in South Africa, whether non-resident or resident, still remains taxable in South Africa. So that's basically just how you submit your returns thereafter after being noted as a non-resident.
Okay. Okay, so what role does exchange control regulations overseen by the South African Reserve Bank play in managing capital flows for individuals now moving funds abroad?
It should be noted that the exchange control regulations have always been there. However, they've been a little bit aggravated by the grey listing status that the country finds itself in, and that has come a little bit more, or seen a little bit more, after the announcing of the grey listing. So the Reserve Bank, or the Financial Surveillance Department of the Reserve Bank, through the banks in South Africa, are mandated to make sure that they check every funds that move across from South Africa to any other foreign country, making sure that they verify the source of the funds, making sure that there is approvals from SARS for the transfer of those funds, and making sure that they do all the checks and every box is checked or ticked to make sure that nothing is suspicious of any in terms of the funds that are being moved.
Okay, Lovemo, you're dealing with this on a daily basis. So this is something that you're constantly working on. So can you elaborate on the process of updating the banking status according to SARB mandates when you are transitioning from a tax resident to a non-tax resident?
So the process starts as soon as you have been confirmed as a non-resident by SARS. That's where you can actually approach your bank to say, I've changed my tax status to a non-resident, and the bank will then have to also change your banking status to a non-resident so that the two matches. Now, the real reason around this, mainly for the banking side, is to make sure that they are aware when they deal with transactions from your account, they should be dealing them from a non-resident perspective. Even when reporting to the Reserve Bank, they should be reporting from a non-resident perspective. Now, you will need the golden letter that we mentioned. Some banks still require what we call the Approval International Transfer, which is AIT. That's the confirmation of funds that you can transfer abroad. However, the reason for those banks to require that, it's just for them to have the full list of your assets that are still remaining in South Africa, so that they can classify those assets as capital assets. In case of you wanting to move those assets across, then they should be able to deal with those assets either immediately after you have been confirmed or in future.
Okay, that's quite interesting. So is that a comprehensive list? What are the full requirements and the procedures to actually move those funds abroad?
Yeah, so the procedure is, the first step, you need to get the approval from SARS, confirming that you are approved to move whatever the amount you want to move. And then the bank will go through the process of checking the source of those funds. They'll go through the process of checking your tax status, making sure that with SARS you're still compliant, nothing is outstanding with SARS. Regardless of SARS having confirmed or approved your transfer, the bank will still check the status. Now that comes down to confirm the link between the banks and SARS, or the Reserve Bank and SARS. They still have to check your status before they ensure any transfers of funds.
Okay, so I'm going to get into some technical questions here. And again, these are questions that we often have clients ask us. So how do individuals classify funds as capital or income? And how does this classification affect the treatment of funds during financial immigration?
So like I mentioned, the list of assets declared to SARS that are required by these banks, it's for the sake of classifying your funds or your assets later. Now, every asset that you declare to SARS as your remaining asset will be classified as capital asset. Now, the proceeds from those funds or those assets will now be regarded as capital funds. Now, any income earned from the same assets, say for example rental income, that will be regarded as income. Or any salaries still left or earned in South Africa, they will also be regarded as income. So the difference between the two is capital, it's a lump sum that you receive from the assets that are remaining in South Africa. Whereas income, it's the payments that you receive either quarterly, monthly, weekly, or whenever from the same assets. So if it's not lump sum, then it becomes income. And the income, it should be noted that income can be transferred without needing approval from SARS.
That's quite interesting as well. Okay, we're getting a little bit deeper into the same topic here now. Lovemo, can you explain the difference between the single discretionary allowance, which most of us are aware of, especially when moving funds abroad, and the difference between that and non-resident travel allowance concerning fund transfers in South Africa?
Yeah, it's quite a good question because a lot of people seem to confuse the two. They really confuse the two. That's what we see practically. So the difference between the two is, although they are both capped at 1 million, the two are actually available to two different categories of taxpayers. The SDA is only available to a non-tax resident taxpayer, whereas the non-resident travel allowance is only available for non-resident taxpayers. However, the travel allowance, it's only available as a once-off, and it's available on the same year that one ceases to be a tax resident. The SDA, it's only available on a calendar year capped at 1 million. So if you use it for the year that's gone, you'll have to wait again. Otherwise, you have to go through the process of getting an approval from SARS to transfer whatever additional funds you would need. Mm-hmm. The same applies well with the travel allowance. If you don't use it on the same year that you cease to be a tax resident, then it's no longer available thereafter. You will have to go through the formal process of getting approval from SARS to transfer those funds.
Mm-hmm. I often see people transferring large sums of money or seeking to transfer large sums of money. And I think anybody who's looking to externalize, a large sum of funds, there's always concern of risk involved. Yeah. So when does the approval from the Financial Surveillance Department of SARB become necessary for fund transfers out of South Africa? And what factors trigger a comprehensive risk management test in this in the context here?
Yeah, that's a very good question again. This approval from the Financial Surveillance Department of the SARB, it has to be sought at a point where someone wants to transfer more than 10 million. Mm-hmm. So if you want to transfer more than 10 million rands, you will have to go through the next phase of approval, which is this approval that we're talking about. This is now regardless of whether you have been approved by SARS. This is an additional approval that you will have to seek. And the approval itself within the Sub-Department of Financial Surveillance entails the risk management test. They look at everything that they could see or find to make sure that before they approve, nothing is suspicious of the funds. They also have to cross-check the sources of these funds before they approve as well. So you have to provide documents to prove where the funds came from. Mm-hmm. It may be cash sitting in your bank account, however, they need to know where did this cash originate. And this may come back down to SARS again to say, well, we know about these funds, they were declared in the returns, they were earned this way, the returns correlate with the earnings or the total money that you have, and then back to SARB, and then SARB will then approve, and then you are cleared to go.
Okay. I feel like you make the process sound very simple, but I've heard how complex these transactions can definitely get.
Yes. So yeah, the steps sound a little bit short and simple. However, the actual checks are deep and comprehensive.
Okay. That brings us to the next question. So, Lovemore, in your opinion, what are the common challenges or pitfalls individuals might face when navigating exchange control during financial immigration, and how do you address that?
So yeah, the main thing that I've seen a lot of experts trying to go through or trying to take is avoiding going through these, thinking that, well, I can just let it go, let it slide and just keep my account as is. Well, there are risks that come with that. Remember, as I mentioned earlier, there is a link between the SARB and the SARS. Should you keep your account not converted, having changed or ceased your tax residence, there will come a time when the two entities will communicate and they will find out that you have been a non-resident. Now, the risk about that is, one, they may freeze your account until it's converted. Now, they will freeze the account on the basis that you're non-compliant in terms of FACTA.
That's quite scary here.
Yeah. And the other thing is, which is the major concern, is have you been transferring funds abroad before the account had been converted to non-resident, the SAP may request you to bring back all the funds that you moved across. Until the account is converted, then move them back again. Now, it may sound a little bit easy, oh, well, I'll just transfer them back, but there is a significant loss of funds there in the terms of the exchange rates. Because you move to Forex and then you have to now move back to Rand and then back to Forex again. So those are the main things that I see a lot of experts trying to take. The main route that they try to take and say, well, I'll just keep my account as is and just move on.
I think compliance considerations are always something that should be at the forefront.
Yes, very true.
Yeah.
And it's someone thinking that, oh, well, I've been living abroad, SARS has never found me. Why now? Well, you may
Until
never
SARS
know.
does come knocking.
You may never know. They might be just right by your door while you think they are not finding you. So taking that risk is not worth it.
I think you can then just help us out here if you can maybe let us know what are the key considerations for South Africans planning to relocate abroad regarding the immigration process. So I think this will then help us with that non-compliance you mentioned earlier.
Yeah. So when one has made the decision to move across, the most important thing is, as you mentioned, coming down to compliance. There are regulations, as we all know, that one needs to comply with in terms of financial surveillance and tax. So I would say the best first step is to seek expert advice. That will help you plan your journey hassle-free and making sure that you comply with every regulation that is available. There is a lot that a lot of experts don't know about either exchange control or tax in terms of them moving across. A lot would think, well, I've moved across, I'm no longer working in South Africa, I've got nothing to do with SARS, I will just move. That's not true. The same comes down to moving funds across. You will always think, well, because I've moved across, I'm living abroad, I can always just transfer funds between the two bank accounts in South Africa and abroad, wherever you are. You may find yourself in the situation where you are told, well, you are a non-resident and you've been transferring funds as resident, choosing the wrong BOB code, which is the balance of payment code. Then please, can you move these funds back? Get the correct regulations followed, convert your account, and then move them across again. So expert advice would be the best first step to take. Seek advice, know what you need to do so that you make informed decisions. You may be thinking of believing that it's as easy as just packing your bags and just going. It's not. There is a lot that needs to be taken into consideration in terms of tax and exchange control.
I think there's not enough voices in the market to advocate for what should actually be done. I think once expats are also abroad, then, they don't have the right experts to actually approach. So then they're in their expat circles discussing these things, and we then find a lot of the misconceptions, some of which you mentioned now. Outside of those, are there any other misconceptions in the market that you might want to clarify?
Yeah, in terms of that, the major one that we've seen for so long, and it's surprising that it's still there, it's people that believe that, well, you need to be out of South Africa for a certain years before you can formalize your cessation or your immigration. I mean, that's not true. The moment you have decided you are leaving and you're leaving for good, at that moment you can start the process. You don't have to wait for certain years before you go through the process. There was also further aggravation of this misconception when the 3-year lock rule of the policies was introduced. And a lot of people thought, well, I need to move out, be out there for 3 years before I can actually formalize my immigration. That's not true as well. The truth there is you need to have been confirmed as a non-resident for at least 3 consecutive years before you can withdraw your policies. Not that you can only start the process there. you can start it now and then only wait for 3 years to withdraw your policies.
Thank you for sharing that with us, Love More. So we're getting to just at the end of this at the moment, and I've got a question for you because I'm curious on what you see on a day-to-day basis. Can you share any examples or case studies of successful financial immigration processes, highlighting, what are the best practices, lessons learned for people who are watching this, so that they also can get an understanding, of what that process entails?
So what I can share is a lot of people have always had the belief that maybe there is a certain cap on what you can do or what you can request to transfer abroad. There is no limit. It's up to you to prove to SARS that you've got the funds, this is the source, and I want to move these funds. Now, the reason why I'm mentioning that is something that comes in my mind, which is interesting, for me, is I recently had an application that we had to do, which was amounting to 194 million that was successful.
194 million.
194 million.
That you transferred abroad. Are you allowed to say where?
No, not really allowed, but yeah, it's something that happened, and that is just to mention, to make sure that people can be aware that there is no limit of how much you can transfer. It's up to you to satisfy the requirements of SARS and the Reserve Bank. Then you are able to transfer these funds. So that's the success, the recent success that we've had. Not the highest. I've had a case some years back that I did and successfully got an approval for the 346 million for a client. But under these most recent stringent processes and regulations, 194 wasn't really like an easy application. There were so many SARS meetings, there were so many SARS calls, so many SARS emails, and so many document requests. And this took a few months to say, but at the end, it was successful. So there is no limit in terms of how much you can move across. It's just for you to have your ducks in a row, have your proof, and every document that SARS may come to request for, and you are good to go.
So, I love hearing the success stories, Love More.
Yeah.
I think from what I hear now, it's not a simple process that can be accomplished by one person and one person alone. So I think a final question is, how important is it, or how important is professional guidance in the financial immigration process? And what role can financial advisors or consultants play in ensuring a smooth transition?
I normally say you easily learn from someone that has gone the route. If you haven't gone that route, it's a trial and error. Now, if you seek expert advice, you're doing the right thing. You're dealing with someone that has gone that route, knows what is required, knows how to navigate anything that comes across in the process, and they will be able to make sure that or ensure success. Now, seeking advice to these people ensures that you take the right route, you do the right things, and you ensures that you remain compliant with every regulation, and making sure that your decisions that you make are made with all the ins and outs of what you're going to face. I mean, it's different. I've seen a lot of clients that come through and say, well, I need assistance with this. Well, we go back and say, okay, this is what we need to do for you to achieve this. And they will say, oh, well, no, I think I can do this myself. You are more than welcome to go and try it. I don't say you're more than welcome to go and do it. I always say you're more than welcome to go and try it. The reason why I say that is I always know that they will fail and come back, because it always comes across as it's an easy process.
Yeah.
However, it's not. And I can assure you that 100% of those clients have always come back. I've got one that recently came back yesterday. after 4 months of trying himself, he came back, and the interesting part is he even mentioned that I agree this is not an easy process, as you said. So it's advisable to seek that expert advice. It will save you time and save you possible criminal charges in the future, because you may do things wrong and find yourself now in very, very hot water, either with SAP or with SARS. So always seek that advice and you won't go wrong. And there are so many people that will proclaim to know and they don't. So you always also have to make sure that you are guided to the right people, not just anyone that says they know.
Absolutely. Some good advice there from Lavmo Ndlovu, the head of SARS and Staff Engagement and Expatriate Tax Compliance. Lavmo, once again, thank you so much for joining. I really do appreciate it. Thanks, everyone. That's it from us.
Thank you so much.